Okay, now we are doing the next part of audit of banks, that is audit of revenue items. This is part C. Let's go for it, please, here, one by one. Let's start, please, here. First is, in relation to revenue items, what are normal revenues? Interest income, investment income, bill discount rate, penalty charges, account maintenance charges, worker facility, ATM transaction, and many more are the income for the bank, revenue for the bank. What all should the auditor check in this regard? Let's do one by one. Let's start with this procedure. We had done 6 concepts in this. In the main answer, order revenue items, concept 1, 2, 3, 4, 5, 6. Concept 1 was before NPA, after NPA. The main area in this was, if just before the NPA or basically regarding the previous year, it can be an issue that income is taken into account, but the money has not come. In this case, there is accounting mistake. So the bank's accounting is not proper. So auditor should check whether after NPA is declared, whether they have reversed it or they have provided for it. This is what the auditor should check. Second, after it is an NPA, there is a significant uncertainty that the bank may not receive the income. In that case, the bank will not receive the income, And of course, they should not take it in accounts also. And this should be the right accounting treatment for it. This is what we saw basically in concept 1. Concept number 2 was what? Concept number 2 was in relation to discount charges earned and discount charges spent should not be netted off. If Axis Bank has earned some discount fees and if they re-discount the bill with HDFC Bank and with the discount charges spent, that discount charges earned and discount charges spent should be shown separately in the profit and loss account. It should not be shown one below the other. You cannot show discount charges earned 10,000, discount charges spent 3,000, outer column 7,000. You cannot show in that manner. You cannot show. You have to show it separately. That is our concept number 2. Concept number 3, discount fees which is earned. Look at this, discount fees which is earned. And if the discounting period is such that the year end is coming in the middle, then the discount fee should be apportioned, divided between the 2 years. Let's go, discounting charges should be apportioned between the 2 years. This is what we had seen. Okay, this concept number 3. Concept number 4, again a very simple one, that was bills for collection. Very simple. When the drawer gives the bill to the bank and tells, please collect the money from the drawee, then when the bank can only charge commission only after the money is collected from the drawee. Only when the drawee gives the money, the bank can charge its commission charges for bills for collection charges. This is concept number 4. Concept number 5, that is in relation to bank guarantee letter. If a person requests the bank to give the bank guarantee letter so that the person can enable some transaction. In the class I had explained to you, the supplier is giving goods and Mr. A is giving the bank guarantee letter to the supplier. Bank will not give this bank guarantee letter for free. It will charge some fees for that. Okay, so bank guarantee charges will be there. That is another income for the bank which the auditor needs to check. And your last point was in relation to letter of credit. As you remember, letter of credit, one very simple area. The importer in India will take the letter of credit, give it to the exporter in UK. Exporter in UK will give to the UK bank. UK bank will debit HDFC Bank in India. In this case, HDFC Bank will recover the money from the importer. That is the main amount along with the charges for letter of credit. That is 1 lakh. At 1 lakh of letter of credit charges is the income for HDFC Bank. That is what we had done. Okay. Next, we had come to this main answer here. Okay. In this main answer, we put a lot of effort in terms of understanding how the concepts work. Let's go with it one by one. Please here. AB's, the code was ABC's tickling video was uploaded by Rema on Facebook in the previous year and current year. We had taken that small baby example, ABC. Let's start, please here. But A and B is, the bank should show the income on accrual basis. And nowadays, all the income is recorded by the bank's core banking software. Tickling matters are the best kind of security, because if the bank has taken security of tickling matters and given loan, not just the asset, but also the income gets assured. So you understand here, tickling matters, if they are given a security, the income is very, very assured from the bank side. Okay, let's go further. All income should be recorded, no income should be unrecorded. That is this point. And what is MA? Let's go for it. Tell me. The auditor will decide by his own judgment what should be the materiality benchmark. If the auditor is unable to decide, The RBI has advised that we have to see whether auditor reckons the income on gross basis or net basis. If they take it on gross basis, we should take 1% of the total income. If it is on net basis, we should take 1% of the net profit before tax. Okay. If the amount, my dear students, is not material at all, we should recognize the income on a receipt basis, and we should never call it, sorry, if the bank recognizes the income on receipt basis, it is not a big problem because the amount is not material itself, but the auditor will not qualify it because the amount is not material itself. Amount is not material. Let's go further. Now this area is what we did in our concepts. Let's go it one by one. Fees and commission, I told you to remember RCLGR. Bank will earn renegotiation and rescheduling of outstanding debts. Bills for collection charges, which was for us, I think it was concept number 4. And after that, we had letter of credit, that was concept number 6, and bank guarantee was concept number 5. Yeah. Let's go further. Bills, in that also we had seen bills purchased, and if the discounting period is coming in the year, and the year end is coming between the discounting period, then the discounting fee should be apportioned between the 2 years. This is concept number 3. And discount charges earned and discount charges spent should not be netted off. This was the next point. Next is bills for collection. See, we have to only recognize the income only after the drawee has collected the bill. Finally, we have previous year, current year. Previous year represents before NPA. This was after NPA. Before NPA, income recorded in previous year. In that case, you should reverse it or provide for it. And if it is after NPA, in that case, you understand here, because there is significant uncertainty regarding collection, no income from NPA should be taken. No income from NPA should be taken. This is what we had done. Okay. This was your main answer of audit of revenue items. We did furthermore, we went to the next area called reversal of income, and we did question number 2, 3, 4 here. This was for us question number 2, this area, which was reversal of income. This was finance charge component of finance lease, and of course this the 4th one was takeout finance. This was question number 3 for us, question number 4, sorry, question number 2, 3, 4, question number 2 for us, question number 3 for us, and question number 4 for us. Let's go for it one by one. Next. If any advance is there and which the bank has taken it as the income, but the money has not come, they should reverse it or provide for it. Similarly, bills purchased and discounted, in that case, the drawee has not paid us the amount. In that case, we expect the drawee to pay, so we had already taken the credit and the money has not come, so we should reverse it or provide for it. And in case of commission, fees, similar income, if we have already taken it as an income but the money has not come, we should reverse it or provide for it. If the income is wrongly recognized in the past, you understand here, reversing it doesn't make sense. We have to do what? We have to create a provision. Make a provision. Next is come to this part here. If interest income is there and we see large debits in the interest income account, we should first of all ask the bank to provide proof, that is communication with borrowers. If the communication is available, then great. If it is not available, in that case, it is very much possible that the bank is involved in some fraud, because they are trying to reverse more transactions so that they can show lesser income, and with lesser income they'll be paying lesser taxes. Okay, let's go further. Question number 3 was finance charge component of finance lease. I told you, in finance lease transaction, the person who is the lessee will be paying the installments on monthly basis. Installment will have the principal and interest. Interest is called as the finance charge component. If the bank expected that the interest, that is finance charge component, will be, if they are taken it as an income already, but if the lessee doesn't pay that monthly rent, you understand here, it means we have recorded the income, but the money has not come. We have to do again what? Reverse it or provide for it. And finally, last point, we have take out finance. I told you, in construction business, loans can be given in various phases. But if the person has cheated us once, then for the further installment that we recover from him, we will record only on receipt basis, because the trust is broken. Are you there with me? Yes or no? Simple. That completes our takeout finance part. This also we had done. Okay. Good. So we had done question number 2, 3, and 4. Now let's go ahead with question number 5. This was very simple. This was in relation to partial recovery. Partial recovery, I told you, 4 lakhs suddenly a person comes and brings. So we did a small exercise in the class. I asked you, tell me how should you treat us, and every answer is correct. So first of all, what we'll do is we'll first look at whether there is an agreement with the borrower or not. If agreement is there, great. If agreement is absent, agreement is there, we'll follow the agreement. Agreement is absent. In that means we have to form a uniform, we have to follow a uniform and consistent policy. But normally, what will the banks do? Practically, I taught you, interest partially or fully realized in NPAs can be taken to income. However, it should be ensured that the credit towards interest in the relevant account are not out of fresh or additional credit facilities sanctioned to the borrowers concerned. So, new interest should be taken into account later. We should take the earlier interest into account first and cover that first. Okay, we had done this area. This was in relation to your partial recovery. Let's go to the next area, everyone. Let's start with this, please. Here, we had done something called as memorandum account. I told you it is a rough work account. Bank uses this only for rough work purpose. Just for, see, they have written their control purpose. See, control purpose, just to ensure that to keep a track of if this person would have paid the installments on time, how much he would have paid. For that, we just note it down. This is the should not be part of your main accounts, should not be taken into account. Yeah. This was question number 6. Last question number 7 was a nice one. This was income from investment. Let's do it. First of all, profit on sale of investments, P&L credit. Loss on sale of investment, P&L debit. Profit on appreciation on revaluation of investments, P&L credit. Depreciation on revaluation of investment, P&L debit. So this was the last 2 points which we did in a very simple manner. Challenge was not this point. Challenge was the first one. Interest income on investments. In that case, I taught you this table. I told you, take interest or dividend on investment for all income that you have earned in this manner. Interest or dividend we should take first. That goes in our big red tick mark there. Okay, so that big red tick mark is here. Okay, that is basically here. Now you will subtract 3 things. Dividend earned from joint ventures or subsidiaries abroad or in India, you will take that. You will subtract broken period interest, and you will subtract any premium that you have earned on SLR investments. That is what you will do. You will subtract these 3 items and you will get this item, this the value here. This completes our audit of revenue items. Are you there with me, yes or no? Comfortable to understand this part here?